Have you ever wondered if it's truly possible to start investing in property with little to no money? It's easy to think that property investment is only for the wealthy or those with huge savings. But what if I told you that you could get started with as little as £1,000 or even less? In today's video, I'm going to break down exactly how you can get your foot on the property ladder with minimal funds, step by step. Whether you're looking to build passive income or grow your wealth over time, these strategies will show you how to start property investing in the UK, even if you don't have much capital. So grab a notepad and let's dive in. Now, the property market might seem intimidating, but there are creative strategies out there that can help you get started without needing tens of thousands of pounds up front. What I'm going to show you today is how you can use techniques like leveraging other people's money, structuring deals in your favour, and utilising alternative financing options to build a property portfolio, even if your own resources are limited. Step 1. Property options. Let's kick things off with property options. One of the best ways to control a property without actually having to buy it right away. Here's how it works. You secure the legal right to purchase a property at a fixed price within a certain time frame, say 1 or 2 years. The best part? You don't need to complete the purchase immediately, so no need for a mortgage just yet. Imagine you find a property worth 150,000 and negotiate with the seller to secure an option for 1,000. This gives you time, maybe 12 months or longer, to either raise funds or find an investor to help you complete the purchase. During that period, you can work on adding value to the property, such as applying for planning permission or just waiting for the market prices to rise. Property options are great if you're confident you can improve a property's value, or if you know that the market in the area is about to rise. But the key here is negotiation. Make sure you lock in a good price. Step 2. Rent to rent. Next up is rent to rent. Another powerful strategy if you don't have a lot of cash to put into buying property. This method allows you to rent a property from a landlord and then sublet it to tenants at a higher rate, giving you a profit without needing to own the property outright. Let's break it down. You approach a landlord who may not want the hassle of managing tenants, especially for multi-let properties like HMOs. You agree to take over the property for a fixed rental price, say £1,200 a month. Then you rent out the rooms individually at £500 each. If you rent out 4 rooms, you could be bringing in £2,000 a month, making an £800 profit before expenses. Step 3. Joint ventures. One of the most effective ways to invest in property when you don't have much cash is through joint ventures. The idea here is that you partner with someone who has the money but maybe doesn't have the time, knowledge or desire to deal with the ins and outs of property management. You bring the expertise, the deal and the time, while they bring the funding. Say you find a property that's a fantastic deal, but you don't have the deposit or funds for refurbishment. You approach an investor, offer them the deal, and you both agree on the terms. Often, profits are split 50-50, or you might negotiate another arrangement that works for both of you. This method not only allows you to get into property with little to no money of your own, but it also helps you learn on the job by working with experienced investors. Your biggest asset here is finding great deals. If you can bring something valuable to the table, you'll find investors willing to work with you. Step 4. Crowdfunding. Another fantastic option if you're starting with very little cash is property crowdfunding. This allows you to invest in a share of a property deal alongside other investors. It's perfect if you've got £1,000 or even less to invest but still want to benefit from property profits. Here's how it works. A developer or company lists a property project online and you can contribute as little as £100 or £1,000. When the project is completed, whether it's a refurbishment or a development, you get a share of the rental income or sales profit depending on the deal. You're not putting your money into one property, but rather into a pool of properties, which reduces the risk. However, with crowdfunding, it's important to read the small print, as these are often longer term investments and your money could be tied up for a while. But if you're just starting and want to dip your toes into the property world, this can be an accessible way to start. Step 5. Buy, refurbish, refinance. Next, let's talk about the buy, refurbish, refinance strategy, or BRRR for short. This is a game changer when it comes to building a portfolio with minimal money tied up. Here's a quick example. You find a property that needs work for 80k. You put in 10k for renovations, making the property worth 120k. After the refurb, you refinance it based on the new value and pull out some, if not all, of your initial cash. You can then use that money to reinvest in another property, and the cycle continues. Make sure to research areas where you can add value through renovations, and look for properties below market value. This strategy requires some patience and planning, but it can be highly effective in building wealth. Step 6. Property sourcing. Now, let's talk about a strategy where you don't even need to buy a property. Property sourcing. If you're good at finding deals, but don't have the funds to purchase them yourself, you can package and sell those deals to other investors. Say you find a property worth 100k, but it's a great deal for someone else who has the funds. You sell that lead to the investor for a sourcing fee, usually around 2k or more, depending on the deal size. You're making money without even buying the property. One thing to keep in mind is that property sourcing requires building a network of investors and knowing how to spot below market value properties. So make sure to hone your skills in deal analysis. Step 7. Rent to buy. Rent to buy is another smart option if you're currently renting and want to work towards ownership without a huge upfront deposit. This strategy allows you to rent a property while part of your rent goes towards the eventual purchase. Here's how it might work. You agree with the landlord to rent the property for a fixed period, maybe 5 years. During that time, a portion of your rent builds up as a deposit. At the end of the rental period, you have the option to buy the property at the previously agreed price. Rent to buy is great if you want to get onto the property ladder but need time to save up a deposit while you live in the home. It also gives you the chance to lock in a purchase price before house prices rise. Step 8. Creative finance and no money down deals. Finally, let's talk about creative finance and no money down deals. These are advanced strategies, but when done right, they can help you acquire property without putting any of your own money into the deal. One example is using a bridging loan, a short-term loan that allows you to purchase and refurbish a property before refinancing it with a mortgage. Another method is lease options, where you take control of a property without having to buy it up front. While these strategies can be very profitable, they do come with risks. Always ensure you've done your due diligence and have a solid exit strategy in place. So, let's quickly recap over the strategies we've covered today. The property options, rent to rent, joint ventures, crowdfunding, BRR, property sourcing, rent to buy, and creative finance. Each of these strategies gives you a pathway to property investment, even if you don't have a huge amount of money to start with. Which strategy are you going to explore first? Drop your thoughts in the comments below. I'd love to hear how you're planning to get started. If you found this video helpful, make sure to hit the like and subscribe button. I'll catch you on the next one.